When we look at a massive global economy like India, it's so easy to just get caught up in the big headlines. But behind every one of those huge numbers, there's always a much more interesting story. So today, that's what we're going to do. We're going past the surface to find out what's really going on with India's economy.
And here it is. This is the number that grabbed all the headlines. A massive 8.2% GDP growth in the third quarter of 2025. I mean, for an economy the size of India, a figure like that is just huge. It absolutely screams boom. But is it the whole story?
Now, this was the fastest growth rate India had seen in a year and a half. So that's a clear sign of a booming economy, right? Well, yes and no. As we're about to see, that single powerful number hides a reality that is, a lot more complex. Okay, so let's start by unpacking that blockbuster 8.2% figure. What parts of the economy were really firing on all cylinders to get a number that high?
The thing is, the growth was incredibly broad. The services sector, which is really India's main economic engine, grew by over 9%. Industry also got a lot stronger, and, this is the crucial part, private consumption, that's you and me buying stuff, held strong. It was just a really powerful, all-around performance for that quarter.
And that brings us to the big question. That amazing data was for the third quarter. But what are the more recent month-to-month numbers telling us now? This is where the picture starts to get a whole lot more interesting. Right, and this is really the core of the whole story. It looks like India's two main economic engines, manufacturing on one side and services on the other, are starting to run at very, very different speeds. And this slide gives you a perfect snapshot of that split. We're looking at something called the Purchasing Managers Index, or PMI. Just think of it as a real-time health check for a sector. And manufacturing's health check, well, it shows a slowdown, falling to a 9-month low. But at the exact same time, the services sector's health check shows it's actually speeding up, probably because global demand for India's tech and business services is just so strong. It's a classic two-speed economy. So yeah, just a quick reminder on what PMI is. It's a really key indicator that looks forward. It's based on what business managers are actually seeing on the ground day to day, which makes it an awesome snapshot of how healthy a sector is at this very moment. Now, this split isn't just happening in the big industries. We're also seeing a really interesting shift with consumers. It seems like after a massive shopping season, people are, taking a bit of a breather. Car sales are a perfect example. After a huge spike during the recent festive season, sales for cars, motorcycles, the whole shebang, they all dipped in November. Now, this isn't a crash. It's what economists call normalization. It just means things are settling back to a more regular pace after a big surge. And we see the exact same thing happening in another key spot, digital payments. Transactions through UPI, which is a great way to track daily spending, also eased off in November. Again, it's that same pattern. Spending is just returning to its baseline after that holiday rush. Okay, so what about the industrial backbone of the economy? This is where the data gets really fascinating because it's sending some seriously mixed signals. Just take a look at these core numbers. On one hand, you've got cement production hitting a 4-month high. That's a great sign for construction. But then, at the same time, steel and power consumption both went down, and overall industrial production slipped a bit. So, what's going on?
Well, the key thing to remember is that different forces are at play here. That boost in cement? That's being driven by a pickup in construction now that the monsoon season is over. Meanwhile, other parts of the industrial sector are feeling that same general cool-down that we saw happening with consumers.
All right, let's zoom out for a second and see how India is connecting with the rest of the world's economy. Because in this area, despite some challenges, we actually find a pretty significant silver lining. And that silver lining is the trade deficit. That's just the gap between how much a country imports versus how much it exports. And that gap just shrank to its lowest level in 5 months, which, believe me, is very good news for the economy. So how did that happen? Well, it was a pretty simple combination of two things. India imported less of key items like gold and oil, and at the same time, its exports of high-value goods like electronics stayed really strong. But, to keep things balanced, it's not all rosy. Foreign direct investment, or FDI, that's the long-term cash that foreign companies invest in India. It did soften a bit, and this suggests that while trade is doing well, some big international investors are being just a little more cautious. So let's put all the pieces together. What's the final diagnosis? Well, it looks something like this. We start with that really powerful headline growth number. But when you look closer, you see a story of normalization after a big festive high. This creates a two-speed economy, where services are booming while other sectors are cooling off. So the main takeaway here?
The real story is one of moderation, not a collapse or a sharp slowdown.
Maybe the best way to think about it is this. The Indian economy isn't some simple rocket ship just blasting off in one direction. It's way more like a complex machine with all these different gears and engines, and they're all moving at their own unique speeds.
And that leaves us with the big question for the year ahead. As all those other parts of the economy settle into their new, normal pace, can the booming services sector generate enough power all by itself to keep lifting that entire complex machine forward? That is going to be the story to watch.